a gold price of $20,000 an ounce and a Bitcoin price of $1 million a Bitcoin, or whatever that number is, does not mean that, trade still won't be priced in dollars. Does not mean it. All it means is that, the global trade surplus that other countries like China are running are greatly reduced. I mean, what is Trump trying to do? He's flirted with capital controls. He's flirted with tariffs. All of this is just reducing the surplus other countries are running, which is going to help with the wealth gap in the United States of America, help with, how artificially strong the dollar is, all of these things. So I think there's like a logical next step, which is, the US supporting Bitcoin's growth and working. And, the stablecoin thing for me, it's a Bitcoin play.
The truth is that Jack Mallers uses strong words. The United States is essentially insolvent, he notes. America's only option, given its over $35 trillion in debt, annual interest rate increases, and politicians who are unwilling to reduce spending or raise taxes, is to devalue the dollar. This entails increasing money printing and utilizing inflation to lessen the actual debt load. But the real question Mallers asks is, what should the dollar be debased against? For further updates on Bitcoin and the wider world of digital assets, please take a moment to like this video, subscribe to the channel, and enable post notifications before we go any further. Thanks, and enjoy the video.
Neutral reserve assets are naturally attractive to them. The United States, in their position of gold, it's a big part of, a lot of the US debt is, backing future promises, whether that's with growth, with technology, with the military, with gold. And I figured Bitcoin would become a part of that story. And so that I remain holding that opinion. I do think that the United States will be the next material part of how governments think about Bitcoin, and they will be the ones that adopt it first for a variety of reasons. I think Bitcoin is very American in the ideals sense. Like, to me, America is one of the most popular startups of all time. Before it's a country, it's an idea. And the American idea and the Bitcoin idea, I think, are very similar. There's, everyone's treated equal, freedom in coming and going, freedom in opining, freedom of speech, like all of these core fundamental democratic human principles, I think both ideas share. So I thought it aligned very well with America's innovative, technology-first, idealist, philosophy. And then more practically speaking, the dollar has to get debased against something. We have to expunge our debt. We can't raise rates, and we can't reduce our spending. And so, Bitcoin, gold, like, what are neutral assets that can play a role in the transition out of the chapter America's found itself in? And I always thought Bitcoin was going to play a role there. So that's my opinion. I'm sure other countries will adopt it in like Bhutan, for example. But I don't know. To me, I don't know. To what degree does that count? Didn't they have like a Terra Luna position or something? So to me, all eyes are on the United States. The dollar is now backed by the Mag 7, the nicest real estate, and the nicest farmland. And now all of a sudden, when you realize, oh, we're living in America, the largest wealth gap in American history. Why? Because foreign trading partners are bidding up all the scarce desirable assets, and everyone else is getting poorer in real terms. They're getting poorer in real estate terms, in gold terms, in Bitcoin terms, in Mag 7 terms. And so then we have an election in Donald Trump where he wins by popular vote, by the way. Insane. Red sweep.
Yeah.
Because the majority of the country is getting obliterated and is poor in real terms. And this kind of monetary era of printing, doing no work, printing pieces of paper, and in return getting real stuff, and letting these pieces of paper that we're exporting come back in and bid away a quality of life for all of our people. Like, it's ran its course, and the people are voting like, please save us. So that's where I think we are. And the way that the US saves itself is it has to expunge and debase the debt, and we have to go back to a neutral reserve, currency. Like, the last thing I'll say, and I hope all this is making sense, you guys will ask me questions or let me know, but China imported 1,000 tons of gold last year. Okay? So they're not buying treasuries. They're buying Mag 7, they're buying farmland in the US, they're buying real estate, kind of, and they're buying a lot of gold. Okay. If gold was $20,000 an ounce, China ran a neutral trade. They didn't run a trade surplus, right? So if what Trump is trying to solve is reduce the trade surplus, reduce the wealth gap in the United States, right? to me, that means gold is severely undervalued. Bitcoin is severely undervalued. The dollar is severely overvalued. I can solve the United States problem in 10 seconds. The problem is, I don't know how to get you reelected, but I can solve your problem. Don't be the world reserve currency. The dollar won't be artificially strong. US assets won't be artificially strong. Gold will rip. Bitcoin will rip. China will import 1,000 tons of gold next year, and they'll have no trade surplus to come and ruin the inner fabric of your country. And the dollar will go down to its natural level, and you will finally have a currency where it's reasonable to have manual labor to produce stuff here. But when you hyper-financialize the US markets where, everyone in the United States is focused on margins, is focused on their stock price, they have to employ labor in China. The US dollar is too strong.
Jack Mallers delivers a profound and intensely intimate message at the end. He serves as a reminder that poor money affects not just asset values and interest rates, but also the structure of society as a whole. The incentives that sustain a robust economy start to erode when fiat money may be issued indefinitely. Real production is replaced by speculation, hard effort loses value, and families, communities, and even entire countries gradually start to disintegrate. Mallers talks about his personal experience growing up in a divorced family and seeing directly how families may fall apart due to financial strain. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
But I do fundamentally believe that the US has found itself in a position where it benefits from a weaker dollar. Like, the rare earth situation, the US cannot go to war right now. So this is beyond like left, right, blue, red, Bitcoin or not. This is a national security threat at the US level. Is we cannot defend ourselves if China decides how long we go to war right now. And so it's about being able to produce our own stuff, being able to defend ourselves, being able to produce our own military equipment. And so for me, the US has found itself in a structural position where a weaker dollar is of national security. A higher Bitcoin and higher gold price is of national security. And so I do understand the idea that people, the intuition of they're not going to do that because they're destroying the very, system they created that's gotten them to this point. But I think there's a lot of room in between that to where, a gold price of $20,000 an ounce and a Bitcoin price of $1 million a Bitcoin or whatever that number is, does not mean that, trade still won't be priced in dollars, does not mean it. All it means is that, the global trade surplus that other countries like China are running are greatly reduced. I mean, what is Trump trying to do? He's flirted with capital controls. He's flirted with tariffs. All of this is just reducing the surplus other countries are running, which is going to help with the wealth gap in the United States of America, help with, how artificially strong the dollar is, all of these things. So I think there's a logical next step, which is, the US supporting Bitcoin growth and working. And, the stablecoin thing for me, it's a Bitcoin play. Tell the US this: you guys want to grow the issuance of Tether? Send Bitcoin to 500,000. We could sit here and we could talk all the time about, what stablecoins are doing in emerging markets. And that's all true and well. But stablecoins are the reserve pair against the 5th largest asset in the world. So you want more stablecoin issuance, which is more T-bill demand. Send Bitcoin to 500,000, and then it's okay, well, if I'm going to debase the dollar, I'll tell you what, Trump, do not debase the dollar against housing. If housing starts ripping 60% CAGR, bad idea. People are going to be pissed. Do not debase the dollar against eggs. If groceries start ripping 60% CAGR, bad idea. Debase it against gold and Bitcoin. And if you need to print money and hide inflation, put all the extra liquidity in stablecoins. Send Bitcoin to 500,000. All the liquidity goes into stablecoins. And then if I was the US government, I would say, well, shoot, I need to make sure that the average American participates in this dollar debasement. It'd be really bad if all these crypto bros sitting in an empty closet named Jack were the ones that benefited from all this dollar debasement and the gold and Bitcoin ripping. And so then you see Donald Trump proposing an executive order that opens up the American savings, opens up 401ks, and he's proposing to dump bonds and stocks out of 401ks and introduce allocation to Bitcoin and gold. So if I was the United States of America, I would go into everyone's savings account, dump their bonds, dump their stocks, buy Bitcoin, buy gold, send Bitcoin and gold higher, which is going to allow me to allow me to finance deficits at the front end because, all the stable coins are going to 10x in issuance, and I'll be able to issue a lot of T-bills. And so I think that version of the future is not like the US sacrificing the fiat like hegemony that right? I think that's like a very logical way to solve the problems they have now. And I think that's actually how politicians think. No one is incented in America to think 20 years from now. They're trying to get reelected.
Jack Mallers contends that raising the price of Bitcoin to at least $500,000 is the greatest way for the United States to increase the use of stablecoins like Tether. He argues that Bitcoin, which has grown to be one of the biggest assets globally, is closely related to stablecoins. The demand for stablecoins and the US Treasuries that support them will increase if Bitcoin does. Mallers cautions that inflating the currency against necessities like groceries or housing leads to social instability and resentment. Rather, he recommends allowing inflation to manifest itself in assets such as gold and Bitcoin. In this manner, when the government issues more money, the extra cash goes into gold, Bitcoin, and stable coins, rather than driving up the cost of housing and food for regular Americans. In his ideal world, politicians like Donald Trump would even suggest changes to retirement savings plans that would move funds from stocks and bonds to gold and Bitcoin. As stablecoin markets grow significantly, that would shield Americans from inflation and allow the government to cover its deficits. Mallers concludes with a more profound point. Society is only as strong as its financial resources. The US dollar has harmed culture, polarized politics, and undermined families because it is easy money that can be printed indefinitely. He talks about his own experience growing up in a divorced family and claims that one of the main causes of family dissolution is financial hardship. He believes that the solution to restoring unity, trust, and long-term stability in society is hard money, such as Bitcoin, which is difficult to print. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content. And as always, happy investing.